Hello, my name is Fabien Bulabois. I'm the product manager for the Bond Calculator app, which supports various types of instruments, including fixed rate, floating rate, fixed to float, municipal bonds, convertibles, and inflation-linked bonds. I'm going to demo the fixed rate bond calculator today with a specific example. This is a forward instrument with a call option, and we're going to run through the various scenarios and see what the application allows you to do. So the first input in the bond calculator is the price. We can see that the yield to call here is 44%, probably not very realistic. So the bond is priced to maturity, which is the yield to worst here. And we can visualize this in the yields tab where you have the various yield to different redemption dates, again, according to the option schedule which is embedded in the instrument. You can also have a visual representation, again, illustrating the fact that the yield to maturity is the lowest yield if you were to purchase the security. We can look at the opportunity of purchasing or selling this instrument on a spread basis. So we can see here the spread versus government versus swap, and also a very important relative value tool where you can look at the bond versus its peers in the same rating category, or in the same rating and sector category. So here it's a BBB USD financial, being the credit arm of Ford, therefore it's a financial issuer even. So you can see, for example, here that the bond yields 6 basis points more than the actual issuer curve for Ford. And you can get a visual representation here as well. This is also illustrated here in the different yields curve tabs. So you've got the bond, which is highlighted here, versus all the previous benchmarks which we talked about. If we navigate to the cash flows tab, we get a view of both in percentage terms and in cash terms of the income flow for the instrument from either the trade date or the settlement, from either the issue date or from the settlement date to maturity. And again, you have the option to either get a graphical or a table format. The return tab allows you to apply various scenarios. So say, for example, if I look at the bond today over a 3-month window, and if I were to shift the government spread by 1 basis point here from 150 to 151, I can calculate the holding period return and the total return with additional fields here, which you can see. And that gives you an opportunity to calculate the return of this particular investment. We also have an option to populate various instruments in the multi-instrument return tab, where you can look at the same return calculations for multiple instruments. In the zero curves tab, we allow users to modify the curve which is used for the calculations of, for example, the Z spread and the asset swap spread. Here it's based on SOFR, being a USD bond. With the recent market developments, it makes sense. But you can also, of course, choose an IRS, a LIBOR curve, or even Fed funds, or even a government curve here. The forward price tab allows you to calculate the forward price of a bond as per its name, assuming that you're going to purchase a security with borrowed funds based on this rate here, which is calculated from the curve underneath. And finally, we have the cross-currency tab, which lets you compare the opportunity of asset swapping a bond in its native currency as per the leftmost column here of 163 basis point, which is exactly the same as this value here, or in a different currency. So say, for example, if I were to asset swap the instrument into floating Australian dollar, I would get a pickup of 171 basis points over the Australian swap curve. Thank you for watching.